Thank you. If you'll each raise your right hand. Do you swear or affirm that the testimony you're about to give before this committee will be the truth, the whole truth, and nothing but the truth? So help you God.
Yes, sir.
Thank you. You may be seated. And we had, I understand the arrangements we made with us that each of you would make a statement before we begin questions. Or do y'all still want to do that? Is that still good for you? Prepared to do that? Very good. Ms. Blass, we'll start with you. Introduce yourself. Tell us who you represent, and then give us your testimony.
Thank you so much, Chairman Hughes.
I want to make sure and move that mic close so everybody can hear you.
Yes, we will. Thank you. And I'll try to speak loud as well. So, Chairman Hughes, thank you. Vice Chairman Birdwell and esteemed members of the committee. My name is Dahlia Blass. I'm a Senior Managing Director, Head of the External Affairs Group, and a member of BlackRock's Global Executive Committee. Given the cross-functional responsibilities of the group I lead, I am involved in our stewardship and sustainability activities, which I understand are areas you're interested in discussing today. So thank you for the opportunity to be here. I also appreciate the opportunity to listen to you as the elected representatives of the people of Texas. BlackRock's story is one of American success and innovation. The firm was started 34 years ago by our CEO, Larry Fink, and 7 other partners working out of a single room. It was founded on the principles of putting clients first, offering them choice to meet their unique needs, and providing them unparalleled risk management. This unwavering focus on clients has led to more and more people entrusting us with their money. We are proud to be helping more than 35 million Americans, including nearly 3.5 million Texans, save for retirement. In fact, our relationships with Texas clients are some of the oldest at the firm, with some going back about 30 years. We have been fortunate to grow these relationships since then, and we are very proud to serve more than 100 Texas institutions. Many of our clients' assets are also invested right here in the great state of Texas. We have helped put our clients invest over $300 billion in Texas to grow Texas businesses, fund Texas communities, and build Texas roads, schools, and pipelines, including the Los Ramones and Whistler pipelines. We do this with the goal of delivering investment performance so our clients can meet their financial goals. We understand how important the money we manage is. Most of it is for someone's retirement, and we are delivering the investment performance for our clients both inside and outside of Texas. For example, for 5 years running, we have delivered above benchmark returns for our active pension plan client assets in Texas. We are fortunate to have a large and diverse client base with unique investment goals and objectives. And so we offer them a broad choice of investment products to meet their unique goals. Ultimately, the decision on how to invest their money is theirs, and we follow their instructions. On behalf of our clients, we are significant investors in public energy companies, including many right here in Texas, such as Exxon, ConocoPhillips, Valero, Phillips 66, Occidental Petroleum, and Cheniere. We also have made significant private investments in Texas energy companies, ranging from natural gas utilities to an energy storage company to carbon capture. As of the end of the last quarter, on behalf of our clients, we had $107 billion invested in Texas public energy companies alone. We believe in investor choice, and we believe investor choice should extend also to voting, to proxy voting. In speaking with clients over the past years, it's become clear to us that more and more of our clients want to express their own views on corporate governance in a meaningful way. So we pioneered voting choice to empower our clients to vote their shares as the true owners of the companies we invest in. We offer choice to clients on how to vote proxies more than any other firm in the industry. Currently, all our public pension plan clients in the United States, including those right here in Texas, are eligible for voting choice. And we are working on how to expand the offering to even more investors including individual investors. And finally, we deliver performance. We deliver performance by managing risks and opportunities in our client portfolios. While BlackRock today may be synonymous with index investing, our roots are actually as an active manager. At our beginning, we were small, but we proved to the market that we had the skills and tools to manage risks and opportunities in active portfolios better than others. And that ethos, understanding and managing risks and opportunities, remains core to our firm culture. We studied dozens of material investment risks, including climate risks, and their relevant impact on portfolios. We do this because we are fiduciaries focused on delivering the best investment results for our clients. In sum, we are proud of the role we have played since our founders sat in that single room 34 years ago in delivering value for our clients, providing unparalleled choice in investment solutions, and offering a data-based approach to risk management. Thank you again for the opportunity to share our story, understand your concerns, and answer your questions.
Thank you, Ms. Blass. So I think you told us your role is head of external affairs at BlackRock. Is that right?
That's correct, sir.
Okay. Is BlackRock an asset manager itself, or through one of its subsidiaries? Just help us with the mechanics of how the chart lays out.
Sure, sir. So BlackRock, Inc. is a public issuer. We're a listed company. And BlackRock is a registered investment advisor with the SEC and with other regulators around the globe where we operate.
And would the term asset manager be an appropriate one to describe BlackRock's role?
Yes, sir.
What does it mean to be an asset manager?
And as an asset manager, our clients give us their money, and we invest in accordance with mandates that they give us, and we invest in their best interests.
I think you probably answered this next question, but to be clear, the money that BlackRock manages as an asset manager, is it BlackRock's money or other people's money?
Not one single penny, sir. It's BlackRock's money. It's other people's money.
You may have told us this. How long have you worked at BlackRock?
About a year and a half, Mr. Chairman.
We talked about this a moment ago, but I want to make sure I'm clear. We have BlackRock, Inc. Are there also separate entities and separate funds with BlackRock, Inc. as the parent? Walk us through that, if you will.
Sure. BlackRock, Inc. is the public company. We are a public issuer. We are a listed public issuer. BlackRock BlackRock Advisors is a registered investment advisor with the SEC. We have multiple advisory units that are registered, but our business is as an asset manager and a registered asset manager with the Securities Exchange Commission, and we also have subsidiaries in other countries where we operate as well.
So BlackRock, Inc. also have a number of funds that are BlackRock funds?
The BlackRock Advisor has the funds that investors, retail investors, and others can invest in.
Do each of those funds have their own boards that manage them, or are they managed by BlackRock, Inc. board or BlackRock Advisors? Tell us how that works.
The BlackRock funds have different boards. There's not one board per fund, but there are different boards for the different, like for example, our ETF business, our closed-end fund business, they have different boards.
I said,
And you
absolutely.
mentioned this to an extent in your opening remarks. Tell us about your main responsibilities as head of external affairs.
Thank you, sir. So I manage several business groups within BlackRock. I had the Global Public Policy Group, our Corporate Sustainability Group, our Long-Term Capitalism, Academic Engagement, and our Social Impact Group. We
hear the term investment stewardship. If I were to use that term, what would that mean to you? What does that mean to BlackRock, the term investment stewardship?
We have the industry's largest stewardship group at BlackRock, and that is the group that engages with public issuers and also votes the proxies on behalf of the clients that have given us their proxy voting.
Is there a separate investment stewardship committee for each of the funds, or is there one that's company-wide? Tell us how that works.
The investment stewardship group is one centralized function for BlackRock. However, we do have, because we have global investments on the part of our clients, we do have local expertise in different markets. So our team is spread globally, and the stewardship votes are done via global guidelines that are, looked at every year by the stewardship team.
As head of external affairs, do you have any direct responsibilities related to actual ESG engagement voting? Do you work on that directly?
I'm sorry, do I?
In your role at BlackRock, do you have any responsibilities related to the actual ESG engagement with companies and the voting of shares?
Thank you for that question, Mr. Chairman. In my role, given that I do head the public policy side of the firm, and with my background, my regulatory background, I do sit on an advisory body for the stewardship team, so I'm very familiar with what they do.
And we discussed this in preparation for the hearing, but many of our questions will be about ESG engagement, to use the euphemism, about voting. And so I understand that you are prepared to answer on behalf of BlackRock for these decisions and these statements that have been made and acts by BlackRock. Is that right?
Yes, sir.
So to the extent that we have to ask you questions about things that happened before you started at BlackRock, which was fairly recently, or about actions taken by different committees or voting actions or so-called ESG engagement, you're prepared to answer questions about that on behalf of BlackRock?
I will do my absolute best, sir, to answer your questions.
Will you let us know when you're not able to speak for BlackRock when we have a question for you?
For sure, sir, absolutely.
We understand it's a busy time of year, but as you know, we requested a number of witnesses who are directly involved in this, who've been there a long time, and for various reasons they were unavailable. And then we're glad you're here. We're not fussing at you, but it's important that you know you're BlackRock today, and we're going to have questions for you. We need answers, okay?
Absolutely. Thank you, sir.
Thank you very much. As head of external affairs, I think you've answered this, but I want to make sure. Do you have any responsibilities related to communicating with the U.S. government?
Yes, sir.
What about foreign governments?
My team does cover different jurisdictions in which we operate. So, yes, sir.
Who do you report to at BlackRock?
Our CEO, Larry Fink.
BlackRock's website says that its first corporate guiding principle is that it is, I'm going to quote this, a fiduciary to its clients, and that its clients' interests come first. So tell us what fiduciary obligations BlackRock investment managers owe to their clients.
I'd be happy to, sir. And in fact, under my tenure at the SEC, I wrote the fiduciary obligation for asset managers. In general, as a fiduciary, you're required by law to act in the best interests of your client, but within the scope of their mandate that they have given you.
Will you explain to us what BlackRock's interpretation is of the fiduciary duty of loyalty? What does that mean at BlackRock?
Sir, for us at BlackRock, we work really hard as fiduciaries to provide our clients with the best risk-adjusted returns we can for their investments.
So the fiduciary duty of loyalty means what at BlackRock?
We owe them in the fiduciary duty, we owe them our duty of loyalty and the duty of care, and in some, that translates into acting in their best interests to deliver for them the best performance we can.
What about the fiduciary duty of prudence?
So that would be within the law for pension clients, and in general, the fiduciary obligations for asset management in terms of investments, in terms of the pensions, they come to the same core issue, which is acting in their best interests to deliver the best performance results we can.
As I'm sure you're aware, last year, attorneys general from Kentucky, Indiana, and Louisiana, just a few miles from here, wrote opinions explaining that under their state laws, investment managers must act in the sole financial interest of their clients. That sounds like BlackRock's first corporate principle that we talked about, that clients' interests come first. Would you agree with those state attorneys general that BlackRock has a fiduciary duty to act in the sole financial interest of its clients?
Yes, sir.
When it comes to ESG investing, which interest is BlackRock trying to serve? The general welfare of your clients, the general welfare of humanity, or the sole financial interest of those clients?
Sir, when it comes to ESG, we look at financial, material risks and opportunities for our clients to deliver the best risk-adjusted returns we can for them.
I'm going to ask you some questions about Climate Action 100. Tell us what's Climate Action 100? Who is that? What is that?
Sure, sir. So Climate Action 100 is an investor initiative that looks at the world's largest emitters to consider like climate change issues.
Do you recognize the document on the screen in front of you? I can tell you that it's the sign-on statement from early January of 2000 for Climate Action 100.
I can barely make it out. I'm sorry, at my age, my eyesight is not what it used to be. Okay, thank you.
I'll represent to you that this, again, is the sign-on statement from January of early on of Climate Action 100. And the first page of this document lays out BlackRock's commitment as a signatory to Climate Action 100. So let me ask you this. Is the purpose of Climate Action 100 for BlackRock and others to secure commitments from companies to take actions to reduce greenhouse gas emissions consistent with the Paris Agreement? Is that your understanding?
Sir, we participate in Climate Action 100 to engage in dialogue with other participants, market participants, governments, so that we understand issues that are relevant to our clients.
So is part of your pledge to Climate Action 100 to secure commitments from companies that you invest in to take action to reduce greenhouse gas emissions consistent with the Paris Agreement?
Sir, when we engage with companies, we engage independently in accordance with our global stewardship guidelines and to understand, from their perspective, understand material risks and opportunities so that we can produce the best performance we can for our clients.
So when BlackRock joins a group and officially signs a statement that says we are going to secure commitments from companies to take action to reduce greenhouse gas emissions consistent with the Paris Agreement, is that not true?
Sir, I do believe in the production. You also received the letter that we signed making it clear with respect to Climate Action 100 that we act independently in accordance with our own fiduciary principles and guidelines, and that is what we do. We are part of this organization to engage in dialogue on issues important to our clients, but we are independent in our actions with respect to our stewardship.
So even though you joined this group and you pledged, BlackRock pledged, to secure commitments from companies to take actions to reduce greenhouse gas emissions consistent with the Paris Agreement, you're saying that's not what BlackRock's doing?
I want to put the context of this language that you have here against...
Well, they're not our words. BlackRock signed it. I didn't write it.
I appreciate that, Mr. Chairman, but we also sent a letter that made it very clear how we view our engagement with respect to climate action.
Well, the letter contradicted this statement and dozens of others, and that's what we're trying to get to the bottom of.
The letter?
Yes.
The letter made it clear that we are fiduciary investors on behalf of clients, and we do not make any commitments or pledges with our clients' money. They make commitments. We do not make commitments with our clients' money.
So what is BlackRock's view on the Paris Agreement? I'm not asking about Climate Action 100. I'm asking for you, as BlackRock, to tell us What is BlackRock's view on the Paris Agreement?
Sir, we look at the transition to a low-carbon economy. We look at the opportunities and the risks with respect to the transition. We do a lot of research in this regard. We believe if there's an orderly transition that could benefit our clients' portfolios, we provide this information. Our role in this is to provide the data, the research, the analytics to help our clients navigate. But ultimately, the decision of how to invest is theirs.
Let me read from your website. This is on your website as we sit here today at this moment. It says, BlackRock's website says, we have joined Climate Action 100 to help ensure the world's largest greenhouse gas emitters take necessary action on climate change. Now, should the website be changed? Should that be taken down?
Sir, what I can tell you is that we have joined Climate Action 100 to make sure that we're participating in dialogues that are important to our clients. But what we do it independently, and we do not commit our clients' assets. If the client has made commitments, we respect that, obviously. We have to. That's their choice. It's their money. But what we do is manage in accordance with our fiduciary duty and their commitments.
So is that statement going to stay on the website that I just read?
Thank you for reading that, sir. I'm not familiar with that statement, but I'll be sure to take that to our team.
You know, there's a whole lot of statements like that. You're going to hear about them today. Do you acknowledge that there are many statements along the lines of what I just read that have come from BlackRock, from Mr. Fink in the media, from publications by BlackRock? Surely we can agree on that. This is not a matter of opinion.
I think if you look at our website and publications, you will see that we have put out a lot of things. The website doesn't say anything about engaging in dialogue in Climate Action 100. It says, I'm going to quote, to make sure everybody's clear, BlackRock's website says, we have joined Climate Action 100 to help ensure the world's largest greenhouse gas emitters take necessary action on climate change. True or false? Sir, what I can say, if I may, two things. Can BlackRock send us a witness who can tell us whether that's a true or false statement on its website today? Sir, if you pull that off the website, then that is on our website. But what I can tell you... I'm not asking if it's on the website. I know it is. Is it true? Does it accurately represent BlackRock's position? Sir, our position is we are members of this group to engage in dialogue on issues important to our clients. Now, we appreciate very much, we appreciate that people have very different views on engagement and voting, which is why we pioneered voting choice. Voting choice, we're looking forward to speaking about a little bit later. I am curious about BlackRock's joining Climate Action 100. A lot of people are. And again, BlackRock's documents and Mr. Fink's statements are pretty clear and pretty unequivocal. And so we'll just have to go through some more of those.
Mr. Chairman.
Senator Colhorst.
May I clarify when BlackRock joined Climate Action 100? Do we know?
I believe it was 2020, but I'm not 100% sure. I'll have to get back to you on that, Senator.
As many of the questions we have will be for BlackRock and State Street, so don't go anywhere, please. We'll have a lot more to visit about.
Mr. Chairman.
Senator Colhorst, go ahead.
If we're on BlackRock, and again, I'm trying to understand all the timing of this and the fairness of it, and as in my opening remarks, which I spared everyone for my 6 pages of legal notes, just to summarize, that we're looking at how, again, standing up for retired teachers and retired state employees and their investments. But going to some of the groups and some of the statements made on your website, it's my understanding that in 2015, Mr. Fink was invited to China to provide counsel to the Chinese Communist Party on how to address a market downturn there. And I'm going to quote something. I continue to firmly believe China will be one of the biggest opportunities for BlackRock over the long term, both for asset managers and investors, despite the uncertainty and decoupling of global systems we're seeing today, Mr. Fink wrote to shareholders in 2020. The same year, BlackRock won the Chinese Communist Party approval to start the first wholly foreign-owned mutual fund business in China. So I have to wonder, I have to ask this for our investments, but does this move make BlackRock incentivize and prioritize Chinese companies over their U.S. competitors? And is this somehow the motivation behind ESG? And is ESG merely virtue signaling for investors, or is it something maybe deeper and darker? And so I guess what I'm asking is, it's Climate Action 100, and I'm looking at all the timing. I'm quoting from your CEO. How does all that couple together? I mean, I've given you how many tons of coal China burns. I told you what they're doing in oil and gas. My colleague talked about, I think you termed it slave labor, and yet, you know, we've heard from one businessman that talks about his, you know, the rankings of ESG. I've studied what y'all have done. I don't know how FTX can get a higher ranking on ESG than ExxonMobil. So what do you say about that timing? I mean, that concerns me. Do you apply these same standards to other investments that you make in other countries? You said that you talk to the U.S. government and foreign government, you yourself.
Senator, we apply our principles, our stewardship principles globally, in the United States, in China, and everywhere where our clients' assets are invested.
So those companies get the same treatment as our U.S. companies. They're ranked the same way, even though we see certain things are discounted, maybe how workers are treated, how much coal you burn. So it's applied globally. What the chairman's talking about in your Climate Action 100 and your agreement, it's applied to every country, every company in every country. Fairly, same.
We do not. The ESG scoring that you had mentioned, I believe earlier, that's not ours. That's third parties that do it. That's not ours. With respect to our stewardship principles, we engage and vote in accordance with global principles that are transparent and very, very public. And I just will note that our business in China, it's a very small part of our business at BlackRock, and the business that you mentioned, we received these licenses under Mr. Trump's trade agreement, and it's a local business in China.
Mr. Chairman.
Chair Bencourt.
Thank you for your testimony. I've got a few questions. You mentioned that you have a long-standing relationship with Texas customers. How do you value the Permian Basin at this point in time compared to maybe a solar project in the same area? How would that be scored by BlackRock?
Thank you so much for this question, Senator. So actually, just in June of this year, we financed the Wink to Webster, $45 million. And we are just, I have to note, we are really proud of our performance for the Texas institutions who have entrusted us with their money. I'll just, if I may, just give you one example. For one client, one account that we run for them has produced over $2 billion, about $2 billion of returns in less than 10 years.
I figured you would be. So my question is, you heard the testimony of Bud Bigelow earlier. Has BlackRock ever encouraged anyone to tweet out ESG-related ideas before you would help them underwrite a project?
No, sir, and we are not a bank, sir.
Well, I know, but I mean,
no.
in any scoring activity that you have ever done, because you've made tried to make a point to Chairman Hughes that the customers make all the commitments. You're just really there as a kind of a service provider.
So we have both retail funds, like our open-ended funds, our exchange-traded funds, and we also have private funds, and we run institutional accounts as well. For our institutional clients, they have investment guidelines and mandates, and this is how we run their investments. For all our retail funds, all of that, their strategies, objectives, holdings, very transparent and public.
Okay, so, but, joining Climate Action 100 seems to be a demonstrative step towards taking a view of as a corporate entity, is it not?
Sir, when we joined Climate Action 100, there is a letter that we have, and it's on our public website, to make clear that we are independent. We do not make commitments with investments or voting that is outside our own fiduciary. We do it independently. We do not coordinate. We do not commit. That letter is on the website. It is public, and I do believe it was provided to the committee as well.
So if we looked at BlackRock's relationship with their customers, you're saying there's absolutely no bias for an energy project in the Permian Basin versus a solar project. You have absolutely no bias at all. The Climate 100 has no effect on your recommendations to either your retail clients or your corporate clients.
Senator, we invest across the chain of energy, oil, gas.
I'm waiting for an answer to my question. Not, I know how you invest things across the chain. I'm asking a question about bias. So because you joined Climate 100, you've made many demonstrative statements on your website, you're saying that you have absolutely no bias and you don't have any tilting towards an ESG score whatsoever.
Senator, we have one bias, and that's to get the best risk-adjusted returns for our clients. That is our bias.
Okay, if that's the case, then if you weren't using an ESG scoring, you were ranked 5th out of 12th in an annualized rating in Florida. How much higher do you think your ratings would be if you hadn't used ESG in Florida?
Sir, I'm not sure I understand the question.
Well, the question is really simple. That you're out of 12 firms that Florida uses, you were ranked 5th on a 1 and 3 and 5 year analyzed return basis. So if you weren't using an ESG scoring, how much higher do you think you would have been than 5th out of 12? Because you are the largest company, apparently. So why were you not number 1?
Sir, we do not use ESG scoring for our investments. For some of our clients have asked us to note the ESG score for the funds that we manage. We publish that. We use ESG integration for our active investments, but that's not ESG scoring.
Well, then why were you fired in Florida? Why did Governor DeSantis fire you on a $2 billion investment? And why did the Florida state recommend that all $13 billion of their investments not be placed with BlackRock? All the literature I see, it's all about ESG.
Senator, respectfully, we actually don't know why we were fired when we were performing really well for the state of Florida. We did not have the opportunity, for which we are really grateful here. Our engagement with the state of Texas has been fantastic, and we did not have that opportunity. We were a very well-performing manager for that account, and we are proud of our performance.
5th out of 12th is above average. I would not consider it well. Okay? So, again, my question is, you're saying that you have no idea why you were fired at Florida, even though all the financial literature that I see, all the periodic literature I see, it's all about ESG. And you say you have absolutely no knowledge of why you were fired from working with the state of Florida.
Senator, we performed very well for the state of Florida, and we are proud of our performance here, right here in the state of Texas, for our
Again,
clients.
I can mathematically tell you that 5th out of 12 is slightly above average, which is 6. So you're slightly above average. You keep referring to yourself as well. You're not first. You're not second. You're not third and first in 3 and 5 year annualizations. You're 5th out of 12. So again, I disagree completely with the characterization of well. And again, I go back to my question. Everything I read about this decision is about ESG. So if you didn't have ESG, if you didn't take it into account, A, why are you being fired? And B, why are you just barely above average on an annualized basis in Florida investments?
Senator, for one Texas client that just publicly put out the results for their board.
I'm asking about Texas. I'm asking about Florida. Answer my question, please.
I will, sir, but if you would just allow me to finish, I'd truly appreciate it, sir, if I can, just to put it in context, if I may.
If it's somehow germane, I'd love to hear it.
Thank you, sir. Appreciate that. So for one Texas client that just put out its board materials, not only did we outperform the benchmark, we were the best manager for every peer.
Ma'am, with all due respect, I'm not asking about Texas right now. I'm asking about Florida. You've been fired. You were 5th out of 12. 5th out of 12 on an annualized basis, which is underperforming by any stretch that I can understand from the standpoint of your company's resources and expertise. And it's not well. And clearly, all the literature, both financial and popular, say it's about ESG. And you're saying you don't understand why you're fired, nor do you understand any of the actions that the state of Florida has taken.
Sir, we performed for the state of Florida. We performed well for the state of Florida. We delivered investment performance for the state of Florida. And we ran those investments in according to with their mandates. That's what we do.
Okay, so their mandates let you be 5th out of 12. That's what you're saying, because that's your annualized ranking in Florida.
Sir, we produce results, concrete results in our management.
The bottom line is you have no idea why you were fired and no understanding of how it relates to ESG, because that was your earlier testimony.
Sir,
Was your earlier testimony that you had no idea why you've been fired by the state of Florida? Yes or no? Because I've got a holographic memory. I don't need to run the tape back.
Sir, we do not know why we were fired when we were performing for the state of Florida. Correct.
Thank you very much for your testimony.
Senator Cole, of course, has a question for you.
Right. It was very impressive when you testified about the different, I want to make sure there are different boards for different funds. Is that what you testified? I'm simplifying what you actually said to the chairman.
That's right, Senator.
And so you listed a number of things that you help manage in your position. One of them was academic engagement. What is that? Just out of curiosity. I don't know what it is. And
Yeah, no, sure. We actually, there is a lot of research that takes place in the asset management space, index investing, bond funds, fixed income, a lot of stuff that, people cover in the asset management space, given the importance of asset management to the national economy. And so when there are academics that are publishing research in the space, we do actively engage. We help them with data in some cases if it's public and we can. So that's our academic engagement program.
so do y'all publicly disclose what university, I would assume it's all universities, who y'all engage with on that?
It tends to be particular professors who are interested in the space, but our academic engagement is also, we publish as well. We're also publishers. We do academic studies and we publish them.
So mostly professors. Would we be able to find a list of professors that you engage with, since it seems like there are a certain set of professors, and what universities they are employed by?
Our engagement is across the United States and in some cases with some universities abroad as well. I do believe we have this is a very new function, I should say, started about a year ago or so. Not that, it's not a very old function. It's just it's something that we brought together. It was kind of throughout the firm, but not concentrated, and if you will. And we brought it together so that we have a more centralized function in how we engage with professors that are interested in the asset management industry.
So since this is December 2022, you said about a year. Could I get a little more specific?
So I'm not guessing, ma'am, we'd be happy to get you that
You're under
information.
oath, so that'd be great. So, Mr. Chairman, would it be out of order to see if we could get, again, specifically, when y'all started with academic engagement, and then, Mr. Chairman, is it in order for me to ask, what universities they're doing research with and for?
It certainly is interesting, and we can put that in writing to your attorneys, or you could just agree now that you'll provide it to us. What do you prefer?
More than happy to provide you with the list of engagements, the topics. More than happy to.
Yeah, I think that's great. I think it's fascinating and would be very useful to again, you're in asset management, and as you say, in your space, y'all do a lot of research, and obviously we have some great universities in the United States, but as you say, you're doing also engagement with other academic institutions across the world. It'd be really good for us to know that. We fund universities at a very high level in the state of Texas, even though they sometimes complain we don't fund them high enough, but it'd be good to know. So, Mr. Chairman, in specific, it would be how long they've had the academic engagement, as you say, you oversee that. And then secondly would be what universities, and in particular, what professors they're doing research with.
Counsel, you got that?
Yes.
Very good. Thank you. Thank you. Senator Hall.
Thank you, Mr. Chairman. And thank you, Ms. Glass, for being here. My question is fairly basic. What is the primary objective of the BlackRock business model? Is it not to maximize the return on investment of your clients? I believe you said earlier.
We are a fiduciary asset manager required by law to act in the best interest of our clients, which for us means producing the best risk-adjusted returns for them.
Kind of like Senator Bittencourt, I'd like for you to answer the question asked. Is not that your primary objective? Is there another objective?
No, sir.
The primary objective is the return on investment for your clients.
Yes, sir.
Okay. What is it about the ESG policies that makes it important to maximizing that return? You could take each of the elements and explain how they contribute to maximizing the return that led you to believe that that was in the best interest of your clients to do so.
Thank you for the question, Senator. So when we look at ESG, we look at material risks and opportunities. So we're looking at unpriced risks in the markets. We're looking at opportunities because when we manage the risks and invest in the opportunities, we maximize the returns for our clients.
Okay. How does decarbonization play into that? How does it fit in maximizing the return on investment? What does it contribute?
So we look at a variety of climate risks, and this is something that has material climate risks, and this is something that has been mandated actually by the SEC since the 70s. So we look at material climate risks and how they could impact a portfolio, and that's how we look at that for the portfolio and to generate the returns we're looking for.
What about governance? How does that materially affect the investments you make that says by this we know we're going to get more return?
Governance, good governance is one of the foundational drivers for long-term performance. A well-governed company is a company that is going to produce well for its shareholders. And there are a lot of studies that show the link between governance and performance. And that is why it's actually the the core of our stewardship function is looking at good governance.
This environment is one of the major elements of ESG. And as much as the United States has one of the cleanest environments in the world, what do you see as the benefit to your clients in the United States of the ESG policies, as much as we are already the cleanest in the world?
We're very proud, actually, to be in a country that you're absolutely right, sir. It is one of the cleanest producers of energy.
I'm asking,
Yep.
What is the benefit? What is the added benefit? We're already there compared to the other countries.
May I answer your question, sir, by giving you a bit of a simplified example, but it's sort of how I think about it. If we are looking at investing in real estate on a shoreline, for example, the shoreline of Florida, to real estate, commercial real estate, exactly the same buildings, same year, same materials, same construction, same usage, same everything. One is 2 feet above sea level, one is 20 feet above sea level. That is climate risk. This is how you think about it, and one would have more unpriced risks than the other.
How did BlackRock come to embrace ESG policies? Was that developed internally, or what entity or group brought that to you?
Thank you for the question. So the governance, the G, this has been a core for engagement and stewardship for decades. This is not a new piece. Good governance, good performance. The E is, the SEC has had, and actually for the S as well, material E and S risks. U.S. public corporations have been required to disclose them ever since we've sort of had the idea of material risks being disclosed by companies. So these pieces are actually not new pieces in capital markets. The new pieces that you're seeing today are more regulators globally looking at more consistent, comparable disclosures, but these are not new concepts, sir.
At the beginning, Senator Goldfuss read off a summary of reports that pointed out that those companies that embrace ESG perform more poorly than those who don't. If your real objective is a return on investment, and Florida is a good example where you obviously are not performing as well as others are, why would you continue to embrace these policies when it is keeping you, obviously, from maximizing the return on investments?
Senator, I really hear your concerns, and I think the context, really matters. So for ESG funds, by way of example, in the United States, we have 66 ESG funds because our investors are demanding these funds. That is out of over 600 funds. And globally, it's about 5% of our global assets because investors want to have these funds. In terms of performance, and I appreciate there are a lot of studies here, a lot of studies on this one, but a lot of them, quite honestly, they're a little bit apples to oranges. If you look at apples to apples, if you look at ESG indices compared to their non-ESG counterparts, non-sustainable counterparts, we did a study in a 3-year period, 76% of time, they actually outperformed their non-sustainable counterparts. If you're comparing the right time frame to the right thing, they are outperforming. That said, sir, we appreciate people have different views about this. Definitely appreciate that. We appreciate it's their money, not ours, which is why we offer choice, not just in investment products, but proud to also offer it in voting.
That's all for now.
If I
Mr.
can,
Chairman.
Mr. Chairman, one last thing.
Senator Betancourt, one more.
I'd like for the committee to hear from the public statement of the Florida's Chief Financial Officer, Jimmy Petronas, because the witness says that she's completely clueless as to why BlackRock has been eliminated from the state of Florida's financial operation. And it's a very long statement, but I'll read one paragraph because I think it's important. Whether stakeholder capitalism or ESG standards are being pushed by BlackRock for ideological reasons or to develop social credit ratings, the effect is to avoid dealing with the messiness of democracy. I think it's undemocratic of a major asset managers to use their power to influence social outcomes. If Mr. Fink, that's paraphrased, or his friends on Wall Street want to change the world, run for office, start a nonprofit. Using our cash, however, to fund BlackRock's social engineering project is not something Florida ever signed up for. It's got nothing to do with maximizing returns. It is the opposite of what an asset manager is paid to do. Florida's Treasury Division is divesting from BlackRock because they have openly stated they've got other goals than producing returns. You are a highly placed person to work for CEO. You have no idea until now what the state of Florida's CFO said or why you were fired? This is, by the way, dated December 1st, 2022.
Respectfully, Senator, I had seen that.
Then why did you say you had no idea why you'd been fired by Florida? Why BlackRock was fired by Florida if you'd seen this?
Sir, I have no idea why we were fired by Florida because we have been producing investment returns. Returns matter, and returns is what we do, and our returns are out there. Our performance is out there. 89% of our active fixed incomes performed above peers. 89% for 5 years.
Just so we're clear, and good question. We're going to get to that. The peers are often European companies. Let's talk about this just as we go forward, just so we can have a real dialogue and really listen to each other in both ways. Senator Betancourt has hit on a very important point, and it reminds us of what you and I engaged with earlier. The CFO for the state of Florida said, here's why we fired BlackRock. He just read it, and you said you'd read that before, but you told us you don't know why Florida fired you. That's a problem. It seems, respectfully, like what we're learning is BlackRock says whatever it needs to say to whoever it's talking to at the time. That's what we're experiencing today. Now, on that, let me ask you this question. We just refreshed the website, and it still says, your website still says, we have joined Climate Action 100 to help ensure the world's largest greenhouse gas emitters take necessary action on climate change. It's 11:03 a.m. Do you still disagree with that statement on BlackRock's website?
So
yes or no?
I will stick with what I explained as.
So you disagree with the statement on BlackRock's website still?
Sir, this is a statement. I don't know the context around what's before it, what's after it. What I can tell you is that with respect to Climate Action 100 and our letter with the entity is public, it's out there, and I believe we gave it to the committee. We act independently, and we do not commit our clients' assets. We are independent in how we invest and in how we vote.
So the website is a problem. Let's see if a letter signed by the founder and CEO is something you can agree with, something BlackRock agrees with at the moment. We're going to put up a letter written to CEOs, Larry Fink. You've probably seen that before. You've probably seen that document before. Do you recognize it?
Yes, sir.
And is it the January 2020 annual letter to CEOs from BlackRock CEO Larry Fink?
That's what it looks like, yes, sir.
Okay. So before we get into details, can we generally agree that CEO Larry Fink can speak for BlackRock?
Yes, sir.
So if he says BlackRock is doing X, we should believe him?
He is our chief executive officer and the leader of our firm.
So if he says BlackRock is doing certain things and not doing other things, we should believe him, right?
He's our CEO.
Oh, good. So I understand these issues come out each year. These letters come out each year, Mr. Fink, to all the CEOs of publicly traded companies. Is that your understanding? Letters like this?
He writes to the CEOs of companies in which our clients are invested.
But the annual letter, as the name would suggest, comes out annually, right?
Yes, sir.
So it's kind of a big deal. People pay attention to this when he writes one of these letters, right?
I will take your word for it, sir.
What's the purpose of the annual letter to CEOs?
Our CEO has been writing these letters for about a decade or so at this point, and he writes them as a fiduciary to our clients. I believe he has that. Yeah, the very big first paragraph, he notes that he writes as a fiduciary to our clients, and he uses these letters to share his insights into what he sees are long-term drivers of value. We are not short-term investors. Given that the majority of the assets we manage are retirement assets, we are long-term investors, and our record and our success story in that regard speaks to itself.
So you're okay if he speaks for BlackRock and we believe what he says?
Sir, our CEO is our founder, our chief executive, and he is the leader of the firm.
I'm going to take that as a yes so we can move on. The second paragraph of the letter says, I'm going to quote from the letter, climate change has become a defining factor in companies' long-term prospects. Then that paragraph concludes with Mr. Fink telling CEOs that he, quote, believes we are on the edge of a fundamental reshaping of finance. Now, did I read that right?
I cannot see from here, but I will take your word so that you're at that.
And I bet that's not the first time you've heard those words, is it?
I have read this letter, so
Okay.
yes, sir.
So before this letter, what was the purpose of finance from the perspective of an asset manager like BlackRock? Before this letter came out, what was the purpose of finance? Before this fundamental reshaping, what was the purpose of finance?
Mr. Chairman, the purpose of the capital markets and finance has always been the same before this letter, during this letter, after this letter, and that's looking for opportunities in the markets and managing risks in the markets to produce the best returns we can.
So what did Mr. Fink mean by the financial reshaping of finance?
Thank you for that question. I don't know exactly, the context of exact reshaping. What I can say.
You've seen this letter. This is the annual letter to CEOs. Now, please don't tell us you don't know about this letter or what it means. Now, come on. What does it mean? What is a fundamental reshaping of finance?
Sorry, sir. That is not what I meant. Did not mean to leave you that impression. If you look, for example, at the technological revolution in finance and how that reshaped sort of the economy, we believe that the transition to a low carbon economy has opportunities and risks, and if managed well, overall, we do believe that will produce better returns for our clients.
So before this fundamental reshaping of finance meant managing risk and maximizing long-term return for investors. Is that close?
I'm sorry, sir. I'm not sure I understand your question.
The purpose of finance was what before this fundamental reshaping took place?
The purpose of finance was and is to finance opportunities for our clients, to find the opportunities for our clients, and to manage risks in their portfolios so that we can produce the best risk-adjusted returns. Our purpose with respect to the capital markets remains the same.
I'm going to read you a quote from a Reuters article from January 2020. This is not from Mr. Fink, don't worry, or from BlackRock. This is from Reuters. The article says, a Reuters analysis in October found the top index fund managers rarely challenge company management and have largely opposed climate change proposals. In 2018 and 2019, BlackRock and Vanguard only backed around 10% of climate-related shareholder resolutions, unquote. Just for context, of course, we're talking about those shares that BlackRock holds, bought with its clients' money, its investors' money, and BlackRock votes those shares at the annual meetings of various companies, right? So far, so good?
Yes, sir.
Is that right? Okay. And so we're talking about shareholder resolutions. So a shareholder brings a resolution that says we want the company to do X, Y, and Z. Those can be all across the spectrum, all kinds of issues, right?
That's correct, sir.
Very good. Thank you. Just want to make sure we're tracking. And so climate change proposals, according to this analysis from Reuters, in 2018 and 2019, BlackRock only voted for around 10% of those climate-related shareholder resolutions. Does that 10% number sound about right to you for the 2018-2019 time period? I know you weren't there, but you're BlackRock today.
No, I appreciate that, sir. I presume our voting records are public, so I'm presuming they pulled it from the public record. So I'm sure they pulled it from our public records.
So in 2018 and 2019, when that 10% number applied, when BlackRock was voting for about 10% of these climate change resolutions, was BlackRock making its voting decisions to maximize return to its shareholders?
Yes, sir.
Was climate change a short-term risk to companies in 2018, 2019?
I'm not sure I understand the question.
Well, I'm not a finance person. I know that's your field, but there's short-term risk, intermediate-term risk, long-term risk, and sometimes those are handled differently, and some are more pressing than others. And in some of Mr. Fink's letters, he talks about climate change as a short-term, long-term risk. I'm asking if in 2018, 2019, if climate change was a short-term risk to companies, in your view, in BlackRock's view.
So for BlackRock, given that we invest long-term assets, most of the assets we invest are retirement assets. They're not short-term assets. We take a long-term view in terms of risks.
But you're not, I don't want to split hairs, but you're not suggesting that BlackRock ignores short-term risk, are you?
No, sir, but our core is to look at the long term because our assets are managed for the long term.
So in 2018 and 2019, was climate change a long-term risk to companies?
Sir, climate risk, other environmental risks, depending on the industry, they've been material risk for companies to consider since the 70s.
So that goes back to a question I wanted to ask you earlier. You were talking about climate risk, how that's been mandated by the SEC since the 1970s. I'm still confused by what Mr. Fink meant by this fundamental reshaping of finance. In his letter to CEOs 2020.
He, in the reshaping of finance, when it comes to the transition to a low-carbon economy, this is the reshaping, looking at the unpriced risks, looking at opportunities in the transition, and we believe that if managed in an orderly fashion, that could actually produce better risk-adjusted returns for our clients' portfolios.
We're going to have some more questions for you, but I'm going to ask a few questions. Senator Coolidge, you have something else for?
I just wanted to ask.
And the witness is not being excused. We're just going to give her a little break.
I wanted to ask Senator Bentoncourt, you've referenced Florida many times today, and appreciate your efforts. Did Florida have a bill to move or to move their funds out of BlackRock, or was that unilaterally done?
Senator, the research I've had, I think the treasurers, and in the case of other states, Louisiana, Missouri, pulled $500 million from BlackRock in October and $794 million from Louisiana. And I think the Florida CFO used his specific ability to pull remove $600 million from BlackRock. Then he put a custodial freeze of $1.43 billion on the remainder. But the witness might know better than I did. I'm just reading periodic literatures and being stunned by the fact that she didn't know that there was what the issues were in Florida until we read the press release to her.
Yeah, Do you know if they took legislative action, or was this a action by the executive branch or by their retirement systems or their funding systems?
Thank you for the question. I believe this was by the comptroller, and I am very aware of what he published. I am not aware of why he did what he did, given that we were a well-performing manager on behalf of that account.
Mr. Chairman, do we have the ability to make those decisions like Florida and act quickly? Or it seems like Senate Bill 13, we had to have a Senate bill and to move our teacher retirement system or our ERS system. Are you aware, do we have the ability, does anyone statewide have the ability to make those decisions, or does it always have to be a legislative action?
Yeah, my understanding is that Senate Bill 13 did empower the comptroller to do some analysis and make some decisions like this. But we do have a more decentralized system. We've seen that come up in a number of ways compared to Florida, where the governor can fire district attorneys and things like that, that power that we don't have. So it can be frustrating. I think there's maybe legislative action required from some of these decisions. And I'll defer to the committee, but I don't think we have the same authority they do when we're not in session. We love this part, having a part-time citizen legislature that's we have real jobs and go home and respond to the people. It does sometimes cause state government to move more slowly in Texas, as you well know. One more thing to close one more topic to finish that up. We talked about how Reuters indicated that 2018, 2019, BlackRock was voting for about 10% of climate-related shareholder resolutions. Would it surprise you to know that the same records show that in 2020, after joining Climate Action 100, BlackRock voted for over 50% of all climate-related resolutions. Does that sound right?
As I mentioned, sir, our voting record is public, so I'm presuming this is from our public disclosures.
And so you don't dispute that?
No, sir.
So before joining Climate Action 100, BlackRock was voting with about 10% of those climate change shareholder resolutions. After joining Climate Action 100, that jumped to over 50%.
Sir, may I make 3 points on that, if I may?
Do we agree? You're not disputing the facts, are you?
I'm not going to dispute what is probably in our public disclosures. Yes,
Please
sir.
go ahead.
Over 90% of the time, we support management, and that is in our public voting record. Over 90% of the time, including the past 3 years, we support management, and I can give you the numbers. It's over 90%. Second point I'd like to make is that our stewardship is governed by good governance to drive long-term performance, and we've actually done an analysis of our stewardship here, and we see a correlation between our voting and stock performance. So our approach is working. And this year, we have seen my third point, sir, we have seen a deluge of shareholder proposals that were very, very prescriptive. We did not support them, and we put out a statement in that regard because we do not believe in telling management what to do. We look to management to help us understand their business, their material risks, and how they're managing those risks. But in general, it's the rare case, actually, when we're not supportive of management.
Thank you. We're going to have some more questions, but want to move over to State Street for a moment or two.
Yes.
Welcome back. As you know, you're under oath, and please introduce yourself, give us your testimony. We have some questions for you. Welcome.
Yes, absolutely. Thank you. And can you hear me okay on the line? All good? Thank you. Well, Chairman Hughes and members of the Senate Committee on State Affairs, thank you for providing me the opportunity to testify today. My name is Lori Heinel. I'm the Global Chief Investment Officer for State Street Global Advisors, the investment management arm of State Street Corporation, which is headquartered in Boston, Massachusetts. Today at State Street Global Advisors, we manage over $3 trillion in assets for investors. We partner with many of the world's largest institutions, as well as financial advisors, to help create better outcomes for them and the people they serve. We work with more than 2,000 institutional clients, including corporations, governments, and endowments and foundations. We also invest on behalf of more than 30 million defined contribution participants in retirement savings vehicles such as 401ks. We were among the first asset managers to bring the power of low-cost index and ETF investing to people around the world starting in the late 1970s. In fact, almost 30 years ago, we created the first ETFs here in the United States. State Street Global Advisors is proud to serve a wide range of Texas entities. Specifically in Texas, State Street Global Advisors manages $12.6 billion for defined contribution retirement plans and $18 billion for state and local public entities. As a broader organization, State Street Global Advisors affiliates are equally committed to servicing our Texas client base, including energy companies. The investment servicing business of State Street Bank and Trust Company has over $864 billion in Texas-based assets under custody and/or administration. State Street Bank also makes equity investments in affordable multifamily housing communities in Texas as part of our tax-advantaged investment group and through our participation in the low-income housing tax credit program. Our current LIHTC portfolio includes 75 Texas properties encompassing over 8,000 affordable units. I appreciate the committee's interest in how State Street Global Advisors manages our clients' investments with respect to environmental, social, and governance factors, particularly as it relates to Texas public funds, and I'm happy to share our principles in that area. First of all, we are a fiduciary. We are obligated to act as a fiduciary for our clients, and that duty is the basis for our approach to all things, including ESG. We believe that company-specific material ESG factors, which could include things like climate impact, but also many other things such as supply chain management, data security, and the treatment of hazardous waste, to name just a few, have the potential to impact the performance of investments we manage for our clients. Our sole focus is on ensuring long-term value creation for our investors. Secondly, we engage with companies in our portfolios we do not divest. As primarily an index manager, we are effectively permanent capital for the companies in the indexes that we are tracking. When we offer, for example, a client an S&P 500 fund, we stay invested in those 500 companies that are part of the index. We do not pick and choose what to invest in. Given this fact, our goal is for all of the companies in that index to perform well because that means our clients will do well. More specifically, we do not discriminate against companies in any sector, including energy companies. That means we do not tell those energy companies to shift their strategy or to drill more wells. That is the responsibility of the company management and its board. Today, State Street Global Advisors funds collectively own $144 billion globally in energy-related securities, with $65 billion in firms based in Texas. We believe we are uniquely positioned and incentivized and have a fiduciary duty to encourage portfolio companies to consider long-term risks and opportunities in order to maximize the long-term value creation for our clients. Thirdly, we do vote proxies as a fiduciary for our clients. Part of that duty is to vote those proxies in the best interest of our fund investors. Now, many of these votes are routine matters where companies are required to seek approval from their shareholders. But in a small minority of cases, votes may be more contentious, including when those votes are prompted by activist investors. For some time, a substantial portion of our client base has had the ability to vote their own proxies if they wish, particularly in separately managed accounts. And this week, we did announce that we would extend voting choice to a wider range of fund investors. But when we do vote as a fiduciary for our funds, we use detailed public guidelines for our voting, which covers most circumstances. And in all cases, when voting our investors' shares, our vote is based on independent research and judgment focused on long-term value to the fund. Fourth and finally, we offer clients choices. We are highly transparent, and our clients have all the information they need to make informed decisions around their use of a wide range of products. In addition to broad-based index funds, we offer a variety of sector and other funds focused on our clients' specific needs and preferences. Any State Street Global Advisors investor can choose to invest in fossil fuels or not at their own discretion. In fact, we manage a nearly $40 billion exchange-traded fund that solely invests in the energy sector of the S&P 500, in which Exxon, Chevron, and Pioneer Natural Resources are among the top holdings. As I previously stated, we take our fiduciary responsibility seriously. In the United States alone, we manage more than $800 billion in retirement assets in North America in the form of defined contribution and defined benefit plans. And we know that behind those big numbers, there are people you represent, like local firefighters, school teachers, and nurses, counting on us for their retirement savings. Thank you for the opportunity to testify today, and I welcome your questions.
Thanks for your testimony. Thanks for being here. I was talking to your lawyer earlier, and I want to make sure I'm clear. Do you anticipate leaving before the hearing is concluded today?
Well, I will certainly make myself available as long as my services are required, Chairman.
Thank you very much. We're certainly not seeking to take advantage of it, but we do have a lot of questions and
Understood.
a lot of witnesses, and so we do have a lot of questions and a lot of witnesses, and so we just want to make sure. But we did give adequate notice of the hearing, and you were very kind to come, so we hope you'll be able to stay and answer some questions.
Yeah, certainly, as long as my services are required by this committee, I'm definitely willing to stay. Thank you.
Thank you very much. Thanks for the introduction and for giving us the overview. I think you've told us this in your remarks, but how long have you been with State Street?
I've been at State Street Global Advisors for over 8 years.
And I'm glad you said State Street Global Advisors. Help us with State Street Global Advisors versus other entities and how that all fits together.
Yes, of course. So the parent company is State Street Corporation, which is listed on the stock exchanges. That is the large custodial bank primarily that many of you may be familiar with. State Street Global Advisors is the asset management division of State Street Corporation. So we are the ones that actually are investing assets on behalf of our clients.
Does State Street Global Advisors have its own board of directors, or is it governed by State Street Corporation's board?
Well, we're not an independent company, so we don't have our own independent board of directors. There's a board of directors for State Street, the corporation. There are, however, mutual funds and fund boards which we answer to, and again, that construct is similar to what you may have heard from the previous testimony, where we have different mutual funds, ETFs, other vehicles, and those vehicles have independent boards that govern those fund complexes. But State Street Global Advisors does not have its own board. No, sir.
We were talking a lot, of course, about asset stewardship.
Yeah.
Do you oversee asset stewardship, all asset stewardship for, I'm going to call it, how about if I may say SSGA
yeah.
to
Yeah.
distinguish that between State Street Inc.
Yes.
But
Yeah.
for State Street, SSGA, are you over all of that investment stewardship?
I do have oversight for the asset stewardship within State Street Global Advisors, yes, sir.
And you may have answered this, but is there a separate asset stewardship committee or a responsibility for each fund, or is there a committee that does that company-wide?
There is not a separate entity for each fund. Our asset stewardship program is centralized, and we exercise our proxy voting responsibilities on behalf of the broader set of funds that we manage.
And tell us who you report to.
I report to the Chief Executive Officer of State Street Global Advisors, recently appointed Yixin Hung. She joined us just about a week ago. Prior to that, it was Cyrus Terbavala, who was our CEO.
Thank you. So it's fair to say you're a senior manager at SSGA.
Sometimes I bear that responsibility, yes, sir.
Thank you for being here on their behalf. I want to ask you about Climate Action 100, about net zero asset managers, and about also GFANS, the Glasgow group, and also CERIS. I want to ask you about CERIS. Is that a North American investor network made up of asset owners and asset managers? And forgive me, I'm from around here. That's CERES,
Yes.
Ceres. Ceres. How do we pronounce that?
Saris is how I
Thank
have
you very
pronounced it,
much.
yes, sir.
So tell us who is Ceres?
Yeah,
Who and
so-
what is Ceres?
Yeah. So maybe if you don't mind, I'll start with sort of a broad overview of these various organizations and how we think about our participation in those, if that would be okay with the chairman.
That would be very helpful. Thank you.
So I actually was quite struck by Mr. Brigham's testimony this morning, because much of what he said is actually very aligned with how we think about this space. So he indicated that, and I'm going to paraphrase, that climate change is real. He indicated that CO2 emissions are contributing to climate change. That would be very aligned with how we think about that space as well. And that's not to suggest that those are the only things that are driving climate change. We all know that climate change has been with us since the dawn of time, but there is certainly evidence that suggests that these climate change issues are becoming more acute for us as global citizens. So I provide that backdrop because our interest in being part of these bodies is to have a voice in what it is that investors need to be aware of as it relates to the impact that their various portfolio companies may be having on the contributing to that particular climate change situation, and how those companies are managing the risks attached to that. So when we engage with these entities, number one, we want to understand what the best thinking is around how to think about climate change. We have our own views on that, but we're looking to other investors and other participants who may have different views or can bring different information to the table. We're trying to understand how these various risks are becoming as important as traditional financial risks that we may have always thought about. So we've always thought about things like companies' accounting standards, things like their leverage ratios and how that makes them creditworthy or not. But increasingly in some of these spaces, we're seeing risks that were not well understood by investors historically. Physical risk, that's an obvious one, right, to the degree that a company's footprint or their supply chains may be disrupted by climate events. That's quite common now. Reputational risks in certain jurisdictions, and again, we've probably all seen some news out of Europe recently where they're going to start to impose incremental taxes potentially on companies that they believe are bad actors from a climate standpoint. Crises events. Certainly, many of these companies are, have susceptibility to various kinds of crises, and how are they managing those risks? Regulatory changes. I just referenced Europe. Again, there are things here in the U.S. as well. Consumer behaviors, et cetera. So I apologize for the bit of a rambling statement here, but that's the basis upon which we engage with these entities, because we want to understand what things are going to be important for our investors to have disclosure around, and what things that's going to be important for those companies themselves to be very aware of and manage from a risk control standpoint. So hopefully that addresses your question, Chairman.
That is helpful to give us a framework of how that fits together. And so following on with your question,
Yes, sir.
Ceres, North America, is Ceres a North American investor network made up of asset owners and asset managers? Mm-hmm. And is one of the purposes of Ceres, I think you answered this, to coordinate on actions related to climate change?
They bring together groups of people to have conversation. They ask us often to state opinions. There are times when they will write papers or propositions, and they will ask for the participants to participate in signatory to those. We, in some cases, if we agree with the positions that they are putting forward, we will participate in that process. There are some times when we've actually chosen not to participate in that process. So we're part of the group. We engage in the dialogue, but we retain independent judgment of when we are actually supportive of a proposition they're putting forward, and times when we might not be as comfortable with that proposition.
And so my understanding is that Ceres and other investor networks back in 2017 formed Climate Action 100. Is that
That's
your
correct.
recollection?
Yes, sir.
Okay. And I'm going to sometimes call it Climate Action 100 or CA 100. But is it fair to say that Climate Action 100 is a global initiative led by investors to foster the clean energy transition by engaging the companies and sectors with those highest greenhouse gas emissions?
Yes, sir. That would be accurate. Yes, sir.
Okay. I'm going to read some quotes from their website, Climate Action 100's website, entitled How We Work. And it says this, in signing up to Climate Action 100, investors commit to engaging with at least one of the 166 focus companies and to seek commitments on the initiative's key asks. Does that sound right?
That sounds correct. Yes, sir.
There are 3 asks, and I'm going to quote, the 3 asks are, quote, to implement a strong governance framework on climate change, take action to reduce greenhouse gas emissions around the value chain, and provide enhanced corporate disclosure.
That's correct. Yes, sir.
Okay. And then engagements with focus companies are, quote, headed by a lead investor or investors and supported by a number of collaborating investors. Does that sound right?
And that is correct language. Yes, sir.
Okay. And then also from their website, Climate Action 100 on their website today describes engagement processes. And here's what it says. Lead investors and those engaging companies individually must disclose through a biannual survey their engagement plans and priorities over the coming 12 months to consumers for concerted action. Does that sound right?
It does, sir. Yes.
Specifically, it says this: investors are, quote, required to liaise with relevant network staff and or lead investors to ensure engagement priorities and ambition are aligned with the goals of the initiative as well as with the overall collaborative approach. Does that sound right?
That is accurate language. Yes, sir.
And then finally, Climate Action 100 directs signatories to communicate, quote, a central message to their respective focus companies. And then it says, and I'm going to quote one more time, inaction by companies following engagement may result in investors taking further action. Is that correct?
Yes, sir.
And then we're going to look at a State Street document.
Mm-hmm.
Similar to this discussion that we were getting close to before, and this is a letter from November 30th, 2020, from State Street Global Advisors about why we are joining Climate Action 100. Does that sound familiar?
It absolutely does, yes, sir.
Well, you've seen that document
I have,
before?
yes, sir.
Okay, thank you. On page 2, there's a paragraph that says this: in joining Climate Action 100, we look forward to sharing with our peers what we've learned in our engagements with more than 600 companies across multiple industries and markets on climate-related issues since 2014. We are also excited about this opportunity to work closely with other asset managers and asset owners to scale our impact on climate change risks. Did I read that right?
Absolutely, yes, sir.
And this was from the CEO,
Yes.
said that.
Yes, it was.
So then it sounds like the purpose of joining Climate Action 100 was to coordinate with other asset managers to scale each manager's impact on climate change. Fair to say?
It is, and again, if I may provide some context, because sometimes the words matter, right? So when we approach this, our interest is in understanding what the company's issues are as it relate to climate, making sure they have a good handle on that. In fact, we engaged around climate several years ago, long before we signed on for this particular initiative, where we had a very intentional engagement to say to companies, we're going to sort of score you on your understanding of your risks. Number one, have you identified any material risks that your company might be faced with as a consequence of its business practices? Number two, to the degree you have identified what those risks might be, are you mitigating those risks? Are you doing things to deal with the potential crisis that might be created, or the potential, and again, this wasn't just related to energy companies, this was related to all companies, because we were really looking for companies who were well managed and understood the risks that were intrinsic in their business and that they were managing those risks. And then third, are you disclosing those risks to investors? Because if you've done the hard work of understanding the risks that you're facing, you've done the hard work of mitigating and managing those risks, and then ideally as an investor, we want to know that, because that gives us a better sense of how well managed the company is writ large. So that's the context through which the words that you read, Chairman Hughes, are intended, is to have an understanding of what those risks are, make sure that we can, that the boards and the companies themselves are managing those effectively, and that we as investors understand that.
Thank you. To follow on with that, we're going to look at another document. This is from November 30th, 2020. And this is a document issued by State Street Global Advisors. Momentum will carry ESG investing far beyond the pandemic. Are you familiar with that document?
I am, yes, sir.
At the top of page 1, it says, we believe that 2021 could be the transition year for concerted global action to tackle climate change and other environmental and social challenges. Is that
Yes,
right?
yes, sir.
If you turn over to page 2, you'll see that it says, perhaps the single most significant development in global efforts to tackle climate change this year has been the election of Joe Biden as the next president of the United States. This represents a pivotal shift in the political climate of the world's largest aggregate carbon emitter. Is that right?
Yes, sir.
Now that sounds like political factors behind SSGA's decision to join Climate Action 100, doesn't it?
So it wasn't intended that way, so I can understand calling that out as being viewed as political. Our view at our core is that this does require global coordinated understanding and action. And again, I would lean heavily into Mr. Brigham's remarks that we believe that climate change is real and that CO2 emissions globally need to be managed if we're to deal with what the potential risks and implications are. I would also say that there has been a lot of activity here in the U.S. which we have been quite concerned about. So, for example, some of the things coming out of the SEC right now around disclosure on Scope 1, 2, and 3 emissions, we did write comment letter on the potential for overreach because there are several things that are very complicated around things like Scope 3 emissions. So I understand the sense that this may have been politically motivated, but I can assure you our interest is to look at this independently and assess whether we are collectively as a society and as a humanity managing through what we do believe to be some concerning issues with respect to climate.
Let me ask you about a related matter. Speaking of the federal rulemaking process, you're familiar with the Labor Department rule under the Trump administration that had to do with
Yes.
ESG investing.
Yes, sir.
Tell us about that rule.
Yeah, so there was a ruling by the Department of Labor that they were putting into place where they, in broad terms, the concern was that companies, asset managers, investors were putting ESG issues first and potentially jeopardizing what they characterized as the pecuniary or financial interests of investors in retirement plans. We actually, sorry.
Oh,
yes,
go ahead.
Yeah, I was going to say,
you.
so we actually responded to that through the lens of our fiduciary responsibility is always to put the pecuniary, i.e. the financial interests of our investors first, always. We also were concerned that our belief is that some of these ESG factors, as I detailed earlier, actually are material financial issues, and there was some concern with the way that that was constructed, that it could put an undue burden on the plan sponsors to prove that they had not incorporated any issues that were not pecuniary in nature. So there were some concerns that we had about how that was characterized.
And so in your lobbying efforts, did you express those concerns and oppose the development of that rule during the previous administration?
We were quite detailed in the things that so yes, we did submit a comment letter, and I believe there were almost 1,000 comment letters on that particular proposal, and we proposed what we viewed as a balanced assessment of things that we were applauding about that rule and some things that we had some reservations or concerns about. Yes, sir. In addition to that comment, did State Street engage in any other lobbying regarding that rule? I don't know specifically. I suspect, or I shouldn't suspect under oath, but I know we routinely do talk to policymakers. So during the course of that, we would have had opportunity to talk to policymakers and express that balanced assessment. Yes, sir. It's been widely reported, and I don't think it's in dispute, that the current administration has repealed that rule, replaced it with a new rule. Did State Street participate in the
repeal of the previous administration's rule and the implementation of this new rule by the Biden administration
So
on
similar.
ESG investing in pension funds?
So similarly, we have opportunity to engage in the process. I can get you details of specifically what that looked like as it relates to that. We would have expressed exactly the same position, though, which is that there are some things related to these rules that we applaud, i.e. To give investors choices, to make sure that the pecuniary interests are first. And there may have been some things that we were, expressed some reservations around as well. And just as a bit of a commentary, personally, I share the committee's concerns that ESG has become such a highly charged, politicized set of letters that we work really hard to make sure we are focusing on those things that are material, that are relevant to the company, and that are ultimately posing risks to that company.
That's helpful and leads to the next question about
Yes,
the
sir.
document that we were just looking at. But before I do that,
Please.
you had mentioned you could provide us information about
Yes,
State Street's lobbying with regard to that.
We could have a follow. We'll have a follow-up of any specifics. I don't recall drafting a comment letter. Maybe yeah, we talked to staff. I don't recall us drafting a formal comment letter related to that, a public comment. We did not.
So,
Oh, we did. Okay, sorry. So we actually did file 2 public comment letters, and we did have engagement with staff. Yes, sir.
so our request would. Oh, go ahead. I don't want to keep you talking to your lawyer. That's important. Go ahead.
Well, we'll get that detail to the committee.
Okay.
Yes,
And
sir.
so specifically what we're looking for is State Street's engagement, lobbying, not just the formal rulemaking process, but other lobbying for the Trump era rule and the current rule. Does that make sense?
Yes, sir.
You need that in writing, Counselor. Is that good enough? Very good. Thank you.
Thank you.
And so,
Chairman, can you
Senator.
clarify again what you just asked for?
Thank you so much. And so the Department of Labor under the Trump administration issued new rules with I think we would agree, the intent to make sure that ESG was not getting in the way of maximizing shareholder returns.
Yes.
State Street engaged in that process and had some concerns, and I think you said you liked some of the rule, didn't like some of the rules.
That's
so they
correct.
engaged in that process. The Biden administration has repealed that rule and come out with a new one. State Street was engaged in lobbying on that.
Correct.
And they're going to, I think the agreement is you're going to get us everything you did through the rulemaking process, through the lobbying on those rules. Is that right?
Mm-hmm.
Does that make sense, Senator? Good. And let me pause and, may I make the same request of BlackRock. Your lawyer's nodding your head, but let's just talk about it for a minute. Of course, having been in the Trump administration, you'd be familiar with that rule that the Department of Labor had in place to make sure that our concerns today were being addressed, right? To make sure that ESG wasn't getting in the way of retirees' benefits. Trump administration had a rule about that. Are you familiar with that rule?
I'm familiar with that rule, sir.
And was BlackRock involved in lobbying, involved in the rulemaking process, engaging at all with the federal government at any branch in the development of that rule under the Trump administration?
BlackRock did submit a comment letter with respect to the 2020 DOL rule, as well as the more recent revision to that rule.
So my request to you, and counsel, I can get it in writing if you want it, our request would be the committee would like to see any written communications and any record or any lobbying, whether through the administrative process or otherwise, that BlackRock engaged in on the Trump administration DOL rule and on the repeal of that rule and the new rule put in by the Biden administration. Does that make sense?
Yes, sir.
Can you do that for us?
Yes, sir.
Counsel, you want that in writing, or was this good enough? Very good. Thank you. And so speaking of shareholder wealth, let's go back to this letter on page 2. At the bottom of page 2, there's a heading that says, "The March from Shareholder to Stakeholder Capitalism." And the text says this, quote, "The traditional paradigm of shareholder primacy is shifting toward one in which companies must be seen to act in the best interest of all stakeholders." Did I read that right?
Mm-hmm. Yes, sir.
Is that the traditional understanding of finance and a fiduciary duty to maximize shareholder wealth?
So first of all, we hold deeply that the primary reason for a corporation to exist is to generate profits and to generate returns for its shareholders. So we are absolutely steadfast in that. We are actually quite concerned about the rise of stakeholder capitalism as a class of investing, where we use that kind of framework is that we do believe that companies who manage all of their stakeholders well will do better in the long term. So that's things like making sure that they're good places to work for their employees. So we did a shareholder engagement a couple of years ago where we were trying to understand a company's human capital strategy and how that human capital strategy aligned with its long-term corporate strategy. That would be an example of worrying about something that might not be an immediate shareholder impact, but over time would be a shareholder impact if they have high turnover, unhappy employees, poor products, et cetera. So that's the context in which we think about what it means to think about your stakeholders more broadly.
Along those lines, is Climate Action 100 about shareholder primacy, or is it about acting in the best interest of all stakeholders?
It is about shareholder primacy because we believe that these climate risks matter and that companies who manage their climate risks better and manage the transition better will do better.
So then if it's still shareholder primacy, why are we talking about shifting away from shareholder primacy towards stockholder primacy?
So I think the subtle,
stakeholder primacy, pardon me.
So I believe that the subtle shift that's happened over the last couple of years is that a lot of things that investors didn't have an easy way to understand or quantify are becoming more important to them. And again, I come back to climate's the sort of easy one in a sense because there are lots of very tangible examples. So insurance companies have always known there were hurricanes in Florida, and they've always managed their business to deal with that kind of climate risk. But we've even seen in some of the more recent situations, the sheer impact has blossomed partly because of the growth of population in Florida, partly because of other kinds of considerations. So I think that the struggle that I have, honestly, Chairman, is that these are good, sound investment principles, but sometimes they get reoriented in ways that are not helpful to investors.
So if there's language on the website about purpose-driven companies and social benefits and social wealth, that really is just another way of saying maximize shareholder wealth.
Well, what we do know, or what we have seen, right, is that the employees today and employees in certain jurisdictions are interested in working for companies that they view as being aligned with them. So that has impact for a company's ability to recruit, attract, retain talent. So, and that's just one example. I'm not saying we're not telling the company what to be as a purpose. We're not telling the company what products to manufacture. We're telling the companies to be aware that some of these things will have implications for their business models. That's how we approach that.
So when State Street Global Advisors decided to join Climate Action 100, I believe in November of 2020, did State Street Global Advisors or State Street speak with anyone at Climate Action 100 before that?
Yes, we would have had conversation. Yes, sir.
Did you ever speak to Mindy Lubber, president of Ceres, about joining Climate Action 100?
I did not personally, but I'm familiar with that name, and I do believe we would have had conversations, but I don't know for a fact. We could certainly check the record and get that fact.
Will you check on that?
Yes.
and let us know about communications with personnel at Climate Action 100 before State Street joined, in particular, in addition, including but not limited to Mindy Lubber. Who made the decision for State Street to join Climate Action 100?
I believe it would have been our then current Chief Investment Officer and our then current Chief Executive Officer on the recommendation of our asset stewardship team.
So did the SSGA board approve it?
Again, we don't have an SSGA board per se, sir, so no, it would not have. It would have been more of an executive team that would have agreed to do that, yes,
So
sir.
the parent company, State Street Corporation, their board would also not have been involved?
They would not have been involved in again, let me confer with counsel, but I don't believe they would have been involved. They would have been notified that we were signing up, but they would not have been approving or disapproving.
Did any environmental groups or activist groups ask State Street Global Advisors to join Climate Action 100 or other net zero initiatives?
So we get outreach from all manner of clients, from groups, and again, we take the independent decision based on whether we think that those are organizations that are going to provide useful, transparent information and where we want to have a voice.
Did any representatives of foreign pension funds or foreign governments ask State Street Global Advisors to join Climate Action 100 or any net zero initiatives?
So again, I don't know the precise, I don't know the answer to that question. We would have to double check where we have communications where I would just again say that it is quite common for investors, other interested parties to reach out to us. We retain the independence of the decision, however.
I'm going to ask one more along
Yeah.
these lines, and it's very important.
Yes, sir.
Did any pension funds that are customers of State Street, such as CalPERS or CalSTRS, those large California state pension funds, did they request that State Street Global Advisors join Climate Action 100 or any other net zero initiatives?
And again, I would have to get the specific, so I don't know specifically, sir. We will get that information. I would, again, expect that we've had lots of outreach regarding that opportunity.
We do need that information. Do you need a formal request, or will you be able to get that to us?
Yeah, we can.
Very good. I need to know this. Did State Street Global Advisors talk to any of its other pension clients before making this decision?
So again, almost certainly, again, I don't have the details. Our general way of operating is to have regular conversations with our, broad constituent groups. That would include clients, it would include other, industry bodies, et cetera.
And perhaps the most important question here for our purposes today, did State Street engage with, check with Texas pension fund clients before
So I do not know
joining
the answer
Climate
to that.
Action 100 and
Yeah.
agreeing to do some
I
pretty
don't-
major stuff?
I don't know the answer to that. We can fact check that to see if there was. I do not know the answer to that.
But those Texas pension funds are your clients.
They are indeed, as I referenced in my opening statement, yes, sir.
Did SSGA poll any of its non-institutional clients before making the decision to join Climate Action 100?
We would not have done a formal poll in that nature. Our general way that we assess these entities is their value that we believe we can get by learning about what that group is doing, sharing what we're doing, and using that as additional input into our independent judgment.
It is the chair's intent, by way of aiding folks who are around today, to take a brief lunch break. Our folks working on the technology needed some time to switch some technology out, and so we'll do it. We'll do 30 minutes. Most folks probably plan on working straight through, but there's great places to eat on the square and not on the square in March.